Everybody, and welcome to the Standing Committee on Public Accounts. Today is September 15th. As per usual, we always open up our meetings by reading the mandate of our committee as well as a statement of purpose and value, so I'll begin with that. The Standing Committee on Public Accounts is charged with matters concerning the public accounts of the province, the annual report of the Auditor General, and fiscal management. Our statement of purpose and values is the Standing Committee on Public Accounts is dedicated to improving public administration in partnership with the Auditor General. The committee examines the administration of government policy, not the merits of it. The committee strives to achieve consensus in its decisions whenever possible. Members take a nonpartisan approach to the work of the committee. So I'll call the meeting to order, and I'll welcome everybody that is here joining us today. We do have members from staff from the Department of Finance. So they will be presenting to us. So I'll first ask for an adoption of the agenda. Okay, we'll give it to Rob. And so I'll introduce our guests today. We have two presentations. The first one will be on the corporate income tax system, and that will be presented by Nigel Burns, the Director of Economic Statistics and Federal Fiscal Relations. And then following that, we'll have another presentation that'll be on our taxation department around property taxation and assessment, and that would be Beth Gaudet, the Provincial Tax Commissioner. So Nigel, I'll hand it over to you and let you go through your presentation, and then we'll open it up for, shall we do questions at that point? Or, no, sorry, we'll take a short recess, then we'll do Beth, and then we'll come back and we'll do questions on both, if that's okay.
Okay.
All right, is that okay with the committee? Perfect. Okay, thank you.
Okay. So I have brought and have disseminated slides for each of you to have, and you can follow along or follow on the screen. But so what I'm here today is to provide a briefing on the provincial corporate income tax system that we have, and we'll start through that now. So in terms of an outline of the presentation, we'll start with a little bit of hopefully a little bit of a scene setter in context, and hopefully that'll help kind of give a lot of background. We'll talk about the tax collection agreement with between the province and the federal government on the administration of the income taxes for the province. We'll talk a bit about the Act itself, although I won't dwell too much on that. But we will spend some time on the rates and thresholds of the system, some of the credits that are in the tax system, focusing on investment. Also, a little bit on the equity tax credit, which is actually a personal income tax credit, but it has a corporate dimension to it. We'll talk a little bit about some of the economic development assistance that's developed either directly through the tax system, through tax rebates or grant programs, and that'll take us through to the end of it.
Thank you.
So just to start off, the system that we have in Canada is an income tax system that is highly harmonized. We have the federal government and provincial governments, all 10 in the 3 territories. You know, we can each raise revenue from income, and that is so we both can raise income taxes, and that's laid out in the constitutional documents. So from the very beginning, we set up a country with overlapping jurisdiction on the taxing powers of income, among other fields as well. Mm-hmm. So we have, and we do have both federal and provincial personal income taxes, and we have federal and provincial corporate income taxes. They need to work together Amongst personal and corporate taxes, there's integration issues there for both governments, but also between governments. What the provincial government does has a potential to affect the tax base and the performance of the tax system of the federal, and vice versa. So what we really have is all the conditions that require a high degree of coordination between the two tax bases, but also between governments. And this is really important. The income taxes, they do represent the single largest source of provincial revenues, own source revenues to the province. These revenues fund important social programming for the province, whether it be healthcare, social development, education, etc. Speaking more to the personal income tax side, it also plays an important role in income redistribution, principally through provision of public services, and to a lesser extent transfers to individuals. The tax system also has a strong influence on economic development, so we have to be conscious of its impacts on the development of the economy. Just a couple of numbers, just to as I said, income taxes are the largest source of own source revenues. In 2018-2019 fiscal year, these totaled almost 480 million, a little more than. Almost a quarter of total revenues to the province, or more than a third of own source revenues. Corporate income taxes raised approximately 94 million that year, which is less than 5% of revenues, so it's 4.5% of total revenue, or 7.2% of own source revenues. So in the system that generates a significant amount of revenue for the province, where we spoke a little bit about the coordination, the primary way that is the coordinating the system between the two governments is through the tax collection agreement. And PEI and all the provinces have a tax collection agreement with the federal government, except Quebec, who administers their both their personal and corporate income taxes themselves. Alberta has an agreement for personal income taxes, but Alberta administers their own corporate. So, but across the country, we've got a high degree of coordination through these agreements, and for those who are not part of these agreements, there's still a significant amount of coordination, even outside. But the basic deal of these agreements is that the federal government will agree to administer these taxes on our behalf, but the province will have to live with certain restrictions on policy. And that we've got to still have a lot of flexibility, but we have some restrictions. While it seems a long time ago now, in 2000, the provinces under modern tax collection agreements did receive more flexibility on the policy side to design, provincial specific rates, brackets, and credits. But on the corporate side, it was largely the same as it always had previously been. But one of the things we get is a high degree of commonality or coordination between the systems, and this allows for a very high degree of economic and efficient administration of income taxes. If you've got one or mostly one set of rules that apply to the federal and most all of the provinces, you've got one set of rules that people have to comply with. That wasn't always the case in Canada, and it was only by kind of doing that for a number of years that it became apparent that coordination was required. So we can efficiently administer income taxes, but it also ensures that we've got an internal economy that's working kind of better, where we would have the free flow of capital, labor, and goods and services across the country. So we don't have internal border controls or, trying to, stop a shipment to ensure that the taxes are paid at the borders or, between provinces. But, so the agreeing provinces agree to use the federal definition of taxable income and basically agree not to poach the tax base of other agreeing provinces. So we'll be a good neighbor. We're not going to try and undermine what is deemed taxable income in the country, and will not develop policies that could be framed as beggar thy neighbor policies in the tax system. And for this, the federal government will administer the provincial taxes for a fee that covers some ongoing costs of the personal income tax system, the tax on income system, plus the cost of administering provincial specific credits and rebates, which are relatively modest. There's a formula, they're a formula-based calculation of the cost. We can get into a little bit of that later if you wish. In terms of the Act itself, it's grown. I think it's 70-some pages of text now. But for this committee, the important parts are probably Part 1, Part 2, specifically the Division C, which is computing tax for corporations, which outlines the rates and deductions, and a couple of credits for manufacturing and processing profits deduction, which the investment tax credit, foreign tax deduction, and a little, for PEI, a little used feature, which is the capital gains refund for mutual fund corporations. And maybe an important point to make here is the system is fairly straightforward. It's kind of hard to believe that we've got a system that it's evolved over time, but it's really, we've got a tax base, taxable income. We've got this chart here is just to show we've got basically two rates over time. We've got the general rate, which has been 16% for quite a long time. And then we've got the blue line representing the small business rate, which had been, until early 2000s, 7.5%. And then it was reduced over time to 1%, and then raised in 2013 to 4.5%, and has since been coming down to currently it's currently 3%, but it's already been legislated to be 2% starting next year. The red line, just to draw your attention to that, is the small business threshold. So this is the amount of taxable income that could be subject to the low rate, or the small business rate. It had been $200,000 for many years, and then in the early 2000s it was raised up to $300,000, and then subsequently up to where it is today, where it's at $500,000. Just a snapshot of where the other provinces are, provinces and territories, as well as the federal government, where we've got the various rates for the general rate, the small business rate and the small business limit. PEI, just as you scan down, you'll see we do have the highest general rate among the provinces and territories. The small business rate, we're kind of at the lower-ish end, going to 2% next year. And majority of provinces, except Saskatchewan, have the $500,000 threshold for small business. Saskatchewan does have a slightly higher rate or level at 600,000. Some provinces do have for companies that would be facing the general rate, they have a reduced rate for manufacturers and processors. Ontario has a 10% rate, Saskatchewan has 10%, and the Yukon has small, very, relatively very low MMP rate for both as a discount off the general rate, but also a M&P rate for small business as well. So we have, while it might be hard to believe, we have a relatively straightforward system for PEI. We've got a measure of taxable income. I haven't spent much time on how that is calculated because that's where a lot of the complexity is. But it's an area we have almost no control over, other than perhaps advocating for changes to the federal government. But as part of this deal, we've agreed to accept the taxable income calculation. We run that through two rates, a general rate, and if you're a small business, you'll with profits under $500,000, you'll attract the small business rate. And we really only have one substantive credit, and that's for the investment credit, and I'll get to that in a minute. But basically, you do those just a couple of steps, and you end up with a net provincial tax. Just to illustrate, so when you run all the companies on PEI through the system, we do, and this is in gross terms, in 2018, the general rate tax generated about a little over 87 million in gross tax, and the small business rate generated about $11 million. Just to give you a little historical comparison, in 2014, the rates there show about 44 and a little over 44 million of general rate tax, and just under 10 million generated by small businesses. So we've seen a fairly significant increase in profits and tax paid by large business in the province. When I mentioned about the substantive credit, it really is our 10% investment tax credit for manufacturing and processing. That's our main credit. That's part of the tax system. It's averaged in terms of how much companies have reduced their taxes by in the last 3 years. It's averaged a little over $5 million. And this is triggered by investments in manufacturing and processing. The provincial foreign tax credit, which it's a minor credit for PEI. It's important in that it helps avoid double taxation. If you're a company that operates internationally and you've already paid the appropriate tax in that other jurisdiction, we don't tax those businesses twice on the same money. So wherever that money was by rights due to be taxed, we'll provide a credit to avoid double taxation. In the act that I outlined earlier, the manufacturers and processors profits deduction, that was ended in 2005, and the political contributions tax credit due to changes to campaign financing ended in summer of 2018. I did mention about the equity tax credit. So this is, it's actually a personal income tax credit, but it helps businesses raise equity financing, which is kind of that economic development angle where a business can raise money from people in the community, but the individual who's put up the cash to buy equity in the company gets the credit. Just wanted to, in terms of this economic development perspective, that credit has cost in the last 3 years an average of $1.4 million. So it's not directly a corporate credit, but it has certainly a corporate finance function to it. Now, we're not the only actor in the room when in the field of economic development. The federal side does operate several programs within the tax system to incentivize or provide some stimulus for investment in and to deliver that through the tax system. In this region, the Atlantic Investment Tax Credit is kind of an important one. The accelerated investment incentives, which were recently brought in, have helped on the depreciation of investments. You can basically quickly write off, in some cases immediately write off investment expenses. And the federal government does offer a program that helps businesses invest in intellectual property through their scientific research and experimental development tax incentive program. The province, the provincial government, does operate several kind of tax incentive programs, and we might use air quotes around tax incentive programs because while they're targeted towards tax, they're not actually in the tax system. So it's kind of a misnomer, but I thought it would be useful to raise that with this committee, just that they're there, they're part of our system. They are separate. The Department of Economic Growth and Tourism and Culture operate several programs, and they report these through their spending plans and table fairly detailed information to the legislature and the budget process on the amount and fairly granular detail on the sectors that receive these grants, and for all to scrutinize. Just to list them here, the advanced marine is, so if you're in the marine sector, your company and you're eligible, you can basically get your corporate income tax rebated to you, the provincial part of the corporate income tax. This is the same for aerospace and bioscience. They can get their provincial corporate income tax rebated back to them. There's also an enriched investment credit. So on top of the more general investment tax credit that's in the tax system, there's this program that tops up an additional 25% credit, and is in addition to the federal investments for encourage investment, and the depreciation assistance as well. That department also offers a share purchase credit, which helps on the corporate financing side, but also is paid to the individual. That the department offers labor rebates, kind of under this banner of tax incentives. And for businesses that are seeking highly specialized labor, they offer a specialized labor rebate, which helps the company acquire those skills, but provides a tax incentive to the individual. So there's corporate assistance kind of developed, delivered through through a rebate to the individual. So these tax rebates, they're really grants, and are disclosed in the legislature as part of the briefing package by that department. And they are tied to the provincial income taxes assessed for that company, or for some of them, for the individual. But it is important to note that they're not part of the tax system. And I conclude it there.
Okay, thank you. So once we finish this section, we had just kind of said we'd ask questions at the end, but it might actually be pertinent to ask questions now, if everybody's okay with that, because then what we have to do is we have to do a little bit of logistics in order to switch out for the next presentation. So if you're okay, then we'll just open it up to questions right now. Is everybody okay with that? Gord?
Yeah, thanks for the presentation, Nigel. Just some questions on the way in which I'm looking here, and it's a great graph on page 6 about $87 million collected in 2018 and $11 million for small businesses. What has COVID done to those numbers for the future? Can you give me any information about what we're looking at and how COVID is affecting? I mean, there was $87 million collected in 2018. What in your opinion, what are we looking at?
Okay, well, we have, I guess earlier this summer, we had, the Minister of Finance tabled a document that contained budget revenues for the current fiscal year. Now, I'm a little bit from memory, but we are in the process of updating those figures as part of kind of the fall update, which will be tabled in due course. But at budget, we had seen, and I'm kind of going back to memory here for where we ended up on the 1920 fiscal year. I believe it did dip. Now that's pre-COVID and related to prior year adjustments for files that came in. But we were assuming at that time that COVID would be, it will come, it will go, it'll pass. Not a major impact on corporate income taxes. Like I say, we're in the process of updating our analysis, which we haven't concluded at this point, but there will be revised information on anticipated revenues this fall.
Gord?
And, Prince Edward Island at 16% corporate rate versus Nova Scotia and New Brunswick at 14%. Do you think that puts us at a disadvantage in the maritime region to attract corporations? Do they look at that number and if we're trying to attract larger businesses to Prince Edward Island? I'm just thinking about things in the industrial park where I am and the businesses that are working there. Do you think that rate is needs to come down a little bit?
Oh, well, that's for others to decide. For businesses, certainly the tax environment that they move into or they want to expand in is certainly it is an important consideration. It's not the only consideration, but it is an important one. And really, to think about, to not have, you probably don't want it to be a standout rate that is in some way offensive for the economic development of a corporation. There's debate over what level that is. We've had a 16% rate for many years. I think generally we would, if you look to just general principles of the tax policy, you'd be wanting, or at least you'd be hearing the voices from many advocating for a system that is very broad, very comprehensive and broad in its application, and in general, as low as necessary.
Gord?
That's it for me right now, Chair.
Okay. Carla?
Excuse me, thank you, Chair. We often talk about reducing the small business tax rate. It was something that was in everyone's 2019 platform. And I'm wondering if you could explain how the small business tax fits into the corporate tax system.
Okay. Well, it's for companies, for Canadian-controlled private corporations with, I believe it's taxable capital of under $10 million. And if their taxable income is less than $500,000, they will, their corporate profits or their taxable income would be subject to the small business rate. So if, in a world where it's 3%, and if they have, for every $100 of taxable income that they have, they'll pay $3 in provincial income tax.
Carla?
And what proportion of businesses qualify for the small business deduction?
Good question. I can get you that. I might even have that. If I brought that with me. Okay, I did bring it. So, in terms of taxable income, it's about 34% is eligible for the small business rate.
30. Was it 34?
34.
I thought it would have been bigger. Carla?
And so what portion of corporate tax revenues come from the small business tax?
We work out from that chart, but it's probably 10 or 12%.
And so how
Carla?
much of that, oh, sorry, Chair.
No, it's
How much
okay.
of that is overall government revenue?
Well, in total, so in total, it's 4.5%. You're probably getting down to about 0.5%.
Carla?
So how much revenue will the province lose if we lower the small business tax to 1%, as is government's goal?
It's probably, I can give you from memory, the impact on provincial revenue from a 1 percentage point reduction in the rate is about 2.7 million.
Carla?
If I can take a little break if anybody else has.
Sure, we'll go to Rob.
Yeah, just a few questions. I had about three here, I guess. But the equity tax credit, you mentioned about the CDIB program, and it's one I've talked to you numerous times about, I guess. But in regards to what actually qualifies for CDIB, has that changed much? I mean, there isn't many CDIB projects out there, are there, for people to invest in? Or how many would be out there, I guess, is a good example. I'm aware of Royal Star, but...
I think that the total list is probably less than a dozen have applied and gotten through the program to actually conclude an offering. The criteria for that program hasn't, in terms of what's eligible, hasn't really changed that much since its inception. Some of the thresholds have, in terms of defining, its original intent was to have a program that provided a method of raising equity financing that was targeted for what was thought as being relatively small companies. Those thresholds have been raised successively to include what would be relatively large companies in the PEI context.
Rob?
And that's the option of the governing party or executive council to change that criteria in general terms. Does it have to comply with any of the other federal taxes or credits or things of that nature? And I guess where I'm trying to head with is, can that expand to more projects being eligible to maybe deal with things like housing issues, seniors housing, things of that nature? Is that a government decision? Is it a federal decision? Who makes that decision?
The province would have probably the most significant, it's mostly what the province wants to do.
Exactly.
Now, having that fit within the systems that we have and the coordination could, I would say, largely be achieved in terms of the substance of what might be proposed. It's mostly up to the province.
Rob?
Another question I had was, when it says here about the provincial tax incentive programs, you have a labor general down there. How is that different from, say, wage subsidy programs that may be offered by Skills PEI, EDA, some of those types of things? And would that be why would we do it through a provincial tax incentive, and why would those businesses or corporations not go through the regular wage subsidy streams? Because it would seem like this would be a bit special as it pertains to that particular business. Is it used as an incentive to attract a business here?
I believe that's the intention, is that they can prospect companies with a package that the company applies for in general. So if their wage bill is $10 million or more, or whatever that threshold is, they can get a percentage of it paid back to them.
Rob?
So, in your opinion, would it be more an advantage to do it through a provincial tax incentive situation, or would it be more easier or advantageous to the business to do it through a wage subsidy program through the existing programs? I guess that's where I'm trying to come at. Why the two different streams?
Well, maybe I think we have a system where most. And maybe I should start off with, the tax system is a take program, and that's its primary operation, is to raise revenue for the province to fund its social and economic objectives. It does begin a little. You do run into challenges when you're trying to have other objectives. Some are more or less compatible, but there's limits to how much stuff you can try to deliver in terms of assistance through a tax system. PEI system has largely evolved as on the corporate side, focusing on it's to raise revenue. It's got, like I said, it has one substantive credit in there relating to investment. That seems fairly broad consensus that probably should be part of the system. There's less of a consensus out there as to what other things you want to add to the tax system. PEI is chosen to do most of those kind of assistance type programs outside of the tax system through programs.
Rob?
I guess that's where I'm coming. It would seem to be, would be more simpler, it would seem, if you wage subsidies, keep them direct, if your taxes or incentive programs are done, to try to keep them a little separate. But I understand flexibility. I guess my final question, and it sort of leads in a little bit to Gord's comments, was about some of the corporations that I'm getting a lot in my district this year around Standard Arrow. Standard Arrow has really been hit hard by COVID when it comes to their workforce. I think there's a lot of them laid off. A lot of them are just doing work sharing of some capacity. Some of them were asked to take all their holidays and things like that. So when it comes into Are they part of this more tax incentive programs for wage subsidies from the past when they were told to come, or not told, or attracted to come here? And how is that going to impact your overall corporate income tax that you were getting? So I would have to assume that they would be not a small business, and you know, will that have a big impact on your overall revenues from COVID that has been directly impacted to that company?
Well, in the spring, as part of the budget package, there's the budget books, and then there's the briefing package. It lists the companies. So the firm that you identified is on that list, is under the aerospace. So you want to think about we've got this program that takes the money in, and then there's a link to how much the rebate is, which goes back out. So the top line revenue number will likely come down if we understand that what happens with that firm is it has an impact of reducing their taxable income. It'll reduce their tax, but it will also reduce the grant on the other side. So in gross terms, we could see a reduction of, for any of these firms that are involved in here that might have a COVID impact or any impact. If it's negative on one side, it's negative on the other. And they cancel out.
My final point, they have always been a very good corporate citizen. They've employed a lot of people in the western end of the province, and I would say that there's certainly concerns there, but in the end of the day, you would still have an impact on their the income tax that those employees would be generating, because they're just not getting the same amount of money because they're not working as often and as many hours or whatever the scenario might be. So I would still say there will be some overall negative income to our revenue lines in the province because of that large company that's having a big challenge due to COVID. So anyway, no further questions for me.
Okay, thanks, Rob. Corey?
Thank you, Chair. I was curious, Nigel, could the HST, so the provincial government, do they receive a rebate from the federal government each year based on, can you explain that? I'm not sure exactly how that works.
The HST, I could come back and talk about HST. The overall revenue,
Yeah.
So I guess maybe to start off, the province does receive a share of the HST. So we've kind of similarly, the province has harmonized its sales tax regime with the federal sales tax, and we call it the harmonized tax. So we've got the provincial rate, it's 10%, and the federal rate of 5%. So that totals to the 15 that we see and pay in general application when we go to the store or get services, get something cleaned, or so the federal government administers that tax, collects it from businesses and from registrants, and then it is allocated to the provinces, the HST provinces, according to the level of the tax base that's in the province, and that determines our share. So at a very general description, that's how that system works, and we get of the goods and services that are taxable in PEI, we get our 10% tax on that amount.
Corey?
So the share that the province receives, is that based on the previous year? So can you explain that a little more?
Okay.
In 30 seconds?
Yes. So there's a formula. So it's a formula-based system that measures the economic activity in the province and determines what part of that economic activity is subject to the tax. That's done for PEI in all of the provinces to determine what part of the tax base, what part of the economic activity in the country, is in the provinces and how much of that is actually taxable. And that determines our share. And that formula is, it's based on estimates in the beginning. So for the current year, in 2020, we don't really have a good, and this might speak to some previous questions about COVID impacts. We don't have the final tally of how much HST would be collected in the province. But we have estimates of what we think that will be, partially informed by what happened in the last couple of years. We have, the data that we have for 2020 is, in terms of how confident we are in it, we're reasonably confident in the estimates. We're more confident in terms of what happened in 2019. We're even more confident in terms of what happened in 2018. And more so in our ability to understand what occurred kind of improves with time. So we have an estimate process that uses the best information that we have, and sometimes that might be 2 or 3 years old, and we have estimates that'll take that from maybe 2018 to say, well, this is what we believe happened since 2018. We think this happened in 2019, and this is what's likely to happen in 2020. And that's what's trying to pin down what our taxable base would be for 2020.
Corey?
So yeah, I guess that's where I was trying to get with it, with COVID and the economic activity this year being way, way down. Is that going to affect the share we receive next year?
It'll likely have an effect for the 2020 year. We did see in the budget documents that were tabled in the I guess early summer, late spring, early summer, already contained a markdown in revenues due to COVID. So PEI was, in terms of the budget season, we were kind of planning in late, I guess early April. The planning part was late March. We basically had something ready to go, or mid-March. And then COVID happened. Other governments had been ahead of us, ahead of the province in terms of tabling a fiscal plan. And some of those plans got tabled after the COVID shutdown, which everyone knew would need to be revised, significantly because of COVID. PEI came kind of at the end of that process in terms of laying out a fiscal plan. Or you could view it as we were one of the first to table like a fiscal plan that incorporated COVID impacts. Because we had March, April, May. Was it kind of the end of June that the budget was tabled? So we had that time to revise, and we had been revising most of the revenue lines that were believed to be impacted by COVID.
Corey?
Do you have a general idea of how much our GDP will be affected because of COVID? Of how much it shrunk? It's going to shrink?
The estimates from the spring, there was wide variance in terms of just how severe this would be. That ranged from this might not be that severe to this could be very, very severe. Like this would be like a pandemic, on a scale of significant proportion. We seem to have largely avoided that, the worst circumstances, but it's as of late spring, early summer, it looked like it might be kind of a -5 on the economy. That calculation gets complicated because we know the production has fallen. A lot of things didn't happen, but people's incomes were stabilized through income support programs designed to respond to the pandemic. So that's going to help, through government transfers, will be an offsetting impact on the reduction in the economy. So people they still receive government transfers that still will count as GDP, but not as much as people think. Like, it still has supported people's ability to pay rent, buy groceries, hopefully live a life in partial isolation or adhering to the public health mandates. But it's helped kind of offset the negative economic impacts. And we've seen a very strong, I'll conclude on this part, we have continued to see a very strong construction sector. Retailing took a big dip, but now it's a fairly strong rebound. And we're seeing labor markets recover as well.
Corey?
No, actually, I'm good, Chair. Thank you.
Good. Okay, Carla?
You had said earlier that the cost to the province in lowering the small business tax would be roughly $2.7 million. Do you have any idea or any estimates on how much of that revenue would be recovered through increased economic activity?
Well, it's no. The short answer, no, we do not.
Carla?
And one more question. Have you noted any other effects the last time this rate was reduced?
Well, when the rate goes down, the amount of money, everything else being equal, it will decline. The revenue will decline. Over the last number of years, we have seen a fairly strong improvement in the performance of the PEI economy, and that, I think, shows up in that earlier chart where you've got the two bars showing a fairly large increase in the gross taxes paid.
Are you good? Okay. I just have a few questions, and I might jump around a little bit. I've just been jotting down some things, but I will start on that two-graph chart. So 2014 to 2018, we saw a change from 54 million to 98 million. Do you have a sense, Nigel, of how many new businesses came to PEI in that area to contribute to that increase, or was there a lot of growth within the companies that were already here that contributed to that increase?
I don't know that right off.
Okay.
But we could go back and look at the number and maybe try to tease out if it's the number or in general if there's just companies became more profitable.
Right. Okay.
We could do that.
That would be great, because that's kind of leads into my I guess the reasoning why I'm asking. The Provincial Tax Incentive Program, so that would be to accomplish two things, I'm assuming, to encourage more companies to come to PEI, as well as to encourage investment within their businesses in order to grow from when they come to PEI and as they stay here and the longer they stay here. So I was wondering if businesses are required to provide clear objectives of how they will use that personal tax incentive program or the grant in order to, I guess, grow the business, in order to contribute more to the economy of PEI.
I'm not sure I know the answer to that.
Okay. Is that, so
I don't-
would that be more of an economic growth and,
Yeah, it would probably best be answered by them. Their program, I'm aware of the program, but I
Yeah.
don't know the details of what, you know, what gets screened in, what gets screened out,
right, okay,
or any stipulations that they might have with specific firms.
right. Because I guess I'm just looking at it from the perspective of that's an investment that the province is making into businesses in order to either bring them here or to have them grow. And do we have measurable objectives in order to see for every $1 million that we put out in grants, did we achieve, you know, a certain rate of growth, and is there a way to look at those programs? But that's probably an economic growth and development question, I guess, maybe. Okay. Can we talk a little bit about this, about the CERB? So one of my first jobs was doing payroll and actually doing it by hand. So and that's probably aging me, I won't lie, like it's not a computer system that I used to use when I did it. And so I guess I find the personal income tax system very interesting, because the objective of the personal income tax system is to take the appropriate amount of tax prior to it being paid out, so that at the end of the fiscal year, it's a wash. And I guess the objective is that people won't have to pay in when it comes to April and you do your taxes. But with CERB, the total taxable income was provided at the time. So the full $2,000 a month was given at the time. So for somebody that makes over the personal exemption rate of $10,500 but would be in that lowest tax bracket, can you tell me, instead of that percentage, like what the dollar figure is that of the impact to their taxable income? So if they submit their taxes in April, for every $2,000, like 2,000 CERB they got, how would that impact them for personal income taxes?
If you're over the basic for federal and provincial, you'll be subject to the 9.8% provincial, let's call it 10, and the 15% federal. So you probably should be putting aside, for every additional $2,000, a quarter of that for your tax liability.
Okay.
Now, whatever offsetting you've got.
Yeah, absolutely.
Yeah.
It all depends on exemptions and that kind of thing. But straight up, if you don't have any exemptions, if you don't have any childcare, if you don't have anything like that to take away to bring your net income down, it's about a quarter of that $2,000. Or sorry, yeah, like 25% of that $2,000 that we should be putting away.
Looking at the two rates.
Okay. And so I'm going to kind of branch out into property but from the whole perspective. So there was a lot of deferral programs that were available to people through COVID. So we had property taxes that could be deferred. We had mortgage rates that could be deferred. We had, I believe, credit card payments could be deferred. Has the Department of Finance done any kind of analysis on what the impacts to islanders are? Like, I guess, how many islanders have taken advantage of deferrals, and what that might mean to them when it comes to April, or when the deferrals are going to come due? Because a deferral isn't like you're waiving what you owe. A deferral is you're allowing it to all accumulate, and then at a certain point you owe it all. So has the department done any analysis on the impacts to islanders when it comes to deferrals?
Maybe, I think on the income tax side, the deferral has largely been on the filing for 2019. So
Right.
this is a big disruption, and the federal administration of 2019 tax returns for
Yeah.
the federal and provincial governments, those filing deadlines were
Extended.
were extended. The system does have, it encourages you to file, as there are benefit programs that a significant number of people would be eligible for. Although while there was relief in trying not to, disentitle people to benefits, child benefits, you need to have a current file
Yeah.
to determine your eligibility and the amount for the current period. So there's an incentive for you to file kind of on time. And there's a host of benefit programs like that. In terms of how much, is your question, how many people took on those deferrals? Or?
Yeah, and so let me kind of expand on it a little bit. So as we said, through CERB, about approximately $250 a month of that $2,000 CERB will be due back in taxes. That's fair to say. And now we are looking at, I forget how many months we're at, we're at about 8 months. Is that? 6 to, let's call it 8 months for easy math. So when somebody files next year, files their income taxes, they don't have any exemptions. Essentially, at the end of their filing, potentially they've got a $2,000 tax bill now that they have to pay, which on top of all of the other deferrals that have been allotted to them throughout CERB, that's a lot of money that's potentially going to, that islanders are potentially going to own. Oh, sorry, if they haven't understood, because a lot of people don't understand personal income tax and how it works. So has there been any analysis by the Department of Finance as to what the implications of that could be for islanders that have drawn or that have done deferrals? Because I guess I'll expand a little bit more. I mean, there was an article that came out that showed that insolvencies and bankruptcies were down 60%, I believe, from April to July. And that sounds like a great number, but also people don't have to, they could have deferred their mortgage payments, they could have deferred their property taxes, they could have deferred their credit card payments. So when you look at what the implications are, when all of that continues to build, there's got to be an end date in which all of the money comes due, and what implication is that going to have on islanders if they've taken advantage of those tax deferrals and credit card payment deferrals and haven't put aside the $250 a month for the CERB. So I'm wondering if finance has done any analysis on the impact to islanders that could have.
I'm not specific to this. I'm not sure about on the property tax side. In terms of the 2019 filings, most people have filed by the September. I think we're coming up to the. It was pushed several times.
Right.
In terms of the filing, we've got some information from CRA that comes to us monthly on the percent of the anticipated total number of files that would come in. What percent of that have been filed? By and large, early in the summer, the filings were down quite significantly because we hadn't, it got pushed to midsummer. So those reports prior to that were down quite significantly. But as we got through the summer and the filing date got pushed, people are catching up. So in terms of their filing for 2019, the last report I've seen for PEI has them about 92%. That's kind of I'd say a ballpark figure. And that would compare to about where we would be this time in any other previous year. We might have like 97% kind of filed. There's always late stragglers that come in. So we might be maybe like 5 percentage points off in terms of kind of later than normal filing because of the extensions.
Okay, and I think I'm really looking at 2020 rather than 2019, because 2019 wasn't necessarily the impacts of COVID and the deferral. All of the deferrals happened in 2020. And so I'm kind of looking forward to, we are now sitting in September. Filings will have to happen in April. Islanders now have about 6 months to understand what could really potentially unfold come April, and potential money that is due when all those deferrals and income tax catches up. So I'm looking more of analysis on, projections of how it's going to impact Islanders come 2020, especially on a personal level. But I will leave that because I have a couple of other questions if everybody doesn't mind. I'd just like to touch on the COVID impact on corporate income tax. So has there been an analysis on how COVID is going to impact based on the current tax system? And has there been any discussion within the Department of Finance of changes that would be beneficial as a result of COVID and impacts on the corporate tax system?
So in terms of updating the numbers, this is a subject of discussion in the department, trying to figure out what the impacts will be. We know that for some businesses, some sectors, it's been very significant. It reduced businesses and resulted in businesses closing, temporarily or in some cases permanently. For other businesses, COVID's been an opportunity for them. It's been very mixed, and that's been one of I think kind of the outlook has been that like the recovery out of COVID will be mixed. Some businesses will struggle. Others have seen fairly good business and improved margins. Do these things offset each other? We don't yet know for certain, but we're learning more kind of every day as we understand how business reacts to this and what it means for and the suite of some business supports for some sectors that are, for instance, receiving the Canada Emergency Wage Subsidy. It's it's covering almost 3/4 of your wage bill. That will have an impact on your margin, your top line receipts, perhaps maybe through a restaurant or seasonal business. Might not be the season you'd hoped for, but if labor represents a significant part of your cost base, having 3/4 it covered under this program would be might result in kind of a normal year profit-wise. But it's mixed. I'm not saying this is going to be the rule. It might, but it might not be the exception either.
Right. Okay. And I just have one more area that I wanted to approach, and again, I think it impacts mostly probably personal income taxes, but also probably corporate income tax as well. One thing that that PEI has, and I don't know how this relates to other jurisdictions, but we do have an underground economy here on PEI. So I guess my first question would be has the Department of Finance done any analysis on the impacts of that underground economy to the public purse when it comes to, can't get the word out of my brain, but when, realizing taxes and that kind of thing that might not actually be disclosed at the time of a tax season?
Yes, this is a subject of some scrutiny and inquiry. Canada Revenue Agency has produced, they've done work in this area. There are reports out there that have tried to measure the underground economy. So you're trying to measure, which is inherently difficult, because you're trying to measure something you can't see, and people who are involved in it don't want you to see.
Right.
So, but among the provinces, PEI, we're aware of an underground economy. We think it might be, I can, if the committee would like, I can forward you the most recent report. PEI does show up as having a larger section or larger share of underground economy among the provinces. We think this might be attributed to a lot of really small type businesses involved primarily in tourism, hospitality, some kind of accommodations businesses where cash is kind of a significant part of the way the business is done. But I'd be happy to send that material back to the committee if that's what you'd like.
Yeah, I would appreciate if you would do that. I drum it up a little bit of conversation there, but if you could send that report to the committee, I would appreciate that. I don't know how other people. Do you have a sense of overall what the underground economy on PEI is valued at?
I don't have that right off the head, but in their most recent report, they do provide estimates.
Sorry?
They do provide an estimate of what they believe is the size of the underground economy. Participation in the underground economy does, I think your question might have been about COVID impacts on the underground economy?
No, just in general. I was just, because I mean, an underground economy, like, sometimes it is absolutely legitimate when you think about how we used to barter for services before. You know, in the farming industry, I raise chickens and you might fish lobster, and, like, we exchange a value that, would be the same, and that is, like the old bartering system. But now at this point in time, it could be, I need my walls painted, and somebody could say, sure, it would be this, on the books, or that, you know what I mean? It could be in any kind of sense or any form. And sometimes it's just based on generational, like how things have been done here, and legitimately people don't see that as an underground economy. However, it is taxes that are not being, it's revenue that's not being declared, and it's not taxes that are not being collected. So that's what I'm interested in, and it's something I don't necessarily always hear a lot of talk about, because it is something you don't talk about, I guess, right? Like, I need a deck built, and maybe the labor, and it's typically around labor, right, and being cash for services. And so I wasn't really around COVID, but possibly around COVID it even got more. I'm not sure about any of that, Nigel. So anyway, it was just something that I was interested in from a general perspective, and how much that is worth to, the numbers that you were providing us. So if you could send that report, that'd be great. Any other questions? Corey?
I don't know if this is something you would know or not, but how many islanders were at the height of the pandemic and and without jobs were on the federal program, sir?
I've looked at this enough, I should remember it.
Even just a general number, it doesn't have to be the.
I hesitate to quote a number, but we have, so the Government of Canada, who's delivering these programs, has been, they've produced data on how many people have been receiving CERB benefits since the beginning of the program and by period. So I can bring you that. I can bring you the most recent information on the number of people who have accessed the CERB benefit.
Corey? Sorry.
Would it be over 10,000?
Yes.
Okay, yeah. All right, any other questions for Nigel? So we're going to take a short recess, and then we're going to allow some seat changing to happen here, and we'll be back in about 1 or 2 minutes. Thanks. All right, we are back, resuming public accounts, the Standing Committee on Public Accounts for September 15th, and I would like to welcome Beth Gaudet. She's a Provincial Tax Commissioner for the PEI, and you'll be reviewing property tax and assessments with us today. Thank you. Go
Thank you
ahead.
very much. The property tax, and please don't hesitate, Chair, to slow me down if I tend to.
Sure. Thank you.
All right. The property tax and assessment systems are administered within the province. And the system includes not only provincial property tax, but also the collection of municipal property tax, municipal fire district dues, and IWMC charges. It's all administered within the provincial property tax system. So just a snapshot of the tax system numbers. We have approximately 110,000 properties, 63 municipalities with which we collect tax on behalf of. Within those 63 municipalities, there's 208 different municipal rates. We have 31 fire districts and 172 fire district rates. And we also administer the Waste Watch system with their various rates for cottage versus full-time resident, etc. The property tax system is a self-responsibility system. If you are a property owner in Prince Edward Island, the legislation requires that you understand your obligations under the property tax system. It's non-discretionary. The Provincial Tax Commissioner is, the authority is delegated to administer the system, and it is important that it is administered uniformly across the province, and therefore I often say that the tax commissioner is part social worker and part tax administrator. It's very important that the rules are applied consistently. However, it's also very important that we work closely with our property owners to make sure they can meet their obligations. And it's also a position whereby it's on purpose, at arm's length from the elected officials, so that property tax issues can be deferred to the Provincial Tax Commissioner. With respect to revenue in 2019, the province collected about 130 million in provincial tax, 60 million in municipal tax, 3 million in fire district dues, and 14 million in waste watch fees. The market value assessment of the property assessment roll for Prince Edward Island is approximately $12 billion. The system has a mechanism with which to appeal your property assessment, which we'll talk about very shortly, is a significant foundation of the tax system. So of the 110,000 properties, in 2019 we received 163 referrals, which is a first level appeal, and 84 late referrals and notices. A late referral means that you don't agree with your assessment value, but you didn't appeal it on time within the 90 days allowed. We do review those requests for referral. However, those people do not have the opportunity to go to IRAC since they have missed the 90-day deadline. And of the 163 referrals that we had, 4 went to IRAC. So if you look at that picture generally, just at a high level, you'll see that the level of referral of assessments versus the 110,000 property tax bills that go out every year is very low. There are 4 main pieces of legislation that guide us in our administration of property assessment and property tax. The Registry Act, the Real Property Assessment Act, the Real Property Tax Act, and the Financial Administration Act. The 2 main foundation systems to property tax are the Land Registry system under the Registry Act and the Property Assessment System under the Real Property Assessment Tax. I often say that tax is an obligation, not a service. However, we try very hard to apply service quality delivery to our clients. However, in the end, when push comes to shove, it is an obligation, not a service. So, first of all, I'm going to take you through the Land Registry and the relationship between the Land Registry system and our property assessment and property tax systems. This is where everything begins. We maintain what's called a property layer database, which If you take a look at the map over on the right-hand side, you'll see that every property, the 110,000 properties in the province, are mapped in this property layer database with property numbers, and behind those numbers, of course, we have property ownership and assessment information. We maintain boundaries for the municipalities and the fire districts, and we also maintain the boundaries for the civic address communities. So if you look at the individual PIDs or property IDs, there would be approximately 110,000 if you looked at the whole map of the province, and then you can drill down with respect to the property layer to the municipalities, the fire districts, and the civic address communities. Every document that comes into the registry office, be it a deed of conveyance, a mortgage, a satisfaction of mortgage, etc., is registered. And we have staff who interpret each document. For example, every conveyance of property or subdivision and conveyance of property, if you take a look at the map on the right-hand side, you'll see that PID 741983 all of a sudden has a little chunk out of it, and it has become, the little chunk has become 1087097. So a deed has come into the registry office, and our staff has interpreted that the owners of 741983 have actually conveyed a portion of that property to a new owner. And that triggers us to set up a new property ID, new property ownership, and obviously the boundary lines of both properties need to be changed, and the acreage and assessment information needs to be changed based on that document. So every single document that comes in is interpreted in that respect. And there are other things that we get off of the registration documents that come in from our interpretation staff. Things such as a life interest in a property. If a property is conveyed, if parents convey a property to a sibling, a child, they may maintain a life interest in the property, and that life interest is documented in the registration document. And life interest is important with respect to both the seniors tax deferral program and the Provincial Tax Credit program with respect to determining eligibility for those particular programs. The other document, very important document, foundation document to our system that comes into the land registry system is the Affidavit of Purchaser, and you may not be able to see that there, but 2A requires the legal counsel for the purchaser to provide the name and address of the new owners. But 2B also requires, at that particular point in time, for the owners to tell us where to send their property assessment notices and their tax bills. So the Act requires the province to ascertain an address for which the administrators will use for sending the property documentation, tax bill, and assessment notice. And this is the address that will be used until such time as the Taxation and Property Records receives in writing a change, a request of change of address. So it's a very, very important foundation document to our system. It also provides the Affidavit of Purchaser, just on a side note, the Affidavit of Purchaser also provides for us the consideration paid on the conveyance property of the property, so that we can administer the real property transfer tax, which is 1% of the value of the conveyance. So that is the registry piece, again at 30,000 feet, and I'll move now to the assessment piece. The primary activity of our property assessment group is to determine and maintain the market value assessment for the 110,000 properties that we have in the province. I talked about the account activity that is initiated by the registry office operations, so we maintain accounts based on what registry information provides to us. And we also undertake a sales analysis of every sale of property in the province to provide support to our mass appraisal system, whereby we will come up with a market value to sales ratio using the sales data of conveyances across the province to help us determine mass appraisal factors at the end of each assessment year, and I'll talk a little bit more about that. The activity that's initiated by the province and municipalities is inspection activity. Inspection activity is triggered when there's new construction or renovations, and it's triggered by building permits. The province does building permit issuance for unincorporated areas and certain municipal areas that don't have their own internal staff to do that work. But the majority of building permits come to us from the individual municipalities. The building permit process is integral to the system in that the new construction and renovation programs, inspection programs, really do define the majority of the annual increase in the roll over time. So it is in the municipality's best interest to stay on top of building permits and to make sure that they are provided to us on a timely basis. Other activity that is carried out by our property assessment staff, and of note, our property assessment staff is a staff of approximately 12 fully designated assessment professionals. It is a requirement of the job to have a designation, an assessment designation from a certified institute in the country. So other activity, mass appraisal, I touched on that briefly. So as part of our so we have 110,000 properties. We do not go out and visit 110,000 properties each year. We go out and we visit properties for which we get information on from building permits that talk about there has been new construction or renovation. So we also know, however, that values increase over time. So how do you keep your roll at a level to reflect the true market value in the province over time? And mass appraisal is how we do this. So using the sales analysis information that we gather through the year, and we capture over a rolling 5-year period as to economic and sales activity, we analyze what we refer to as work units. So the 110,000 properties are categorized into or classified into approximately 400 plus work units. And at the end of each assessment year, so at the end of 2019 for 2020, we review each individual work unit and compare our market values for the work unit to the sales activity over the last 5 years for that work unit, and determine whether there should be an adjustment multiplier applied to all the properties in that work unit. Okay, so that is done every year at the end of each year for the next year. So an increase in your assessment could be as a result of the mass appraisal activity, the activity in your particular work unit, or new construction or renovations that you've done on your particular property. And those will be reflected on your notice of assessment with your property tax bill. We also have a reappraisal process by which, if there is a particular industry or a particular group or type of properties that there may be, let's say for the sake of example, all the activity that's going on with apartment buildings in Prince Edward Island right now, we may determine that that group, that like property group, should be reviewed independently outside of the work units to say, has there been an economic bump, a market value bump in that type of property, and take a look at what are our values compared to what the particular like property values are on the market. And again, that is a project type of work that is done, not an annual type of work that is done. And I already spoke about the referrals and the appeals. Every referral that comes in is a second look. So because we don't go to every single property and value property by property, when you receive your assessment notice, it's important to review the market value assessment on that notice and say, do I feel that that assessment fairly reflects what I could sell my property for in Prince Edward Island in this particular year? And that is the question that people ask themselves, and if they disagree with their assessment, they refer the property, and a supervisor will, at that particular point, do a one-of review of the assessment of that particular property. And appeals, if we've done everything that we can with a property owner that we feel the assessment is right, we feel the market values are right, the property owner has the opportunity to appeal to IRAC, and we must present our evidence at that particular point in time. The assessment record itself has basically three types of property. So again, if you, and we will take a look at a notice of assessment here in a minute, but the notice of assessment will classify property, as we have it classified on the assessment record, as commercial, institutional, or special purpose property. So commercial operations, hospitals, schools, jails, those would be commercial, institutional, or special purpose type of properties. Then we would have our non-commercial property, and the large majority, let's say 90+ thousand of our properties would be residential properties, and they would be classified as non-commercial residential. Non-commercial other is primarily vacant commercial property. So if you have a commercial property that is not running a commercial operation, then that property, for the period of time that it's not running the commercial operation, becomes non-commercial other, and they will pay a non-commercial rate. We have non-commercial farm property, and in assessing farm property, we subdivide the farm into a residential portion, which is the farm home, the residence, and up to 1 acre of land, and all of the other farm property being farmed is under non-commercial farm. Non-commercial other also would include property owned by a farmer that's not being farmed. Okay. So the property assessment cycle, I can start at any point here, but I will start at the top, where we consider January the point with which we cut off assessment work for the current calendar year. So if we're talking about we're in the cycle for 2020. In January of 2020, we would cut off assessment work for the calendar year 2019. Okay? And we would send a final, what we call an amended bill. We would send a final amended bill to property owners for the calendar year 2019 if they had done renovations or new construction, or we had done an inspection, or if there was a conveyance to a new property owner based on something coming into the registry office, we would send a final amended bill for 2019 to those property owners in January. So to us, that's the last notice of property tax for 2019 for our property owners. Then, once that is done, we undertake a year-end process. And our year-end process has two objectives: to have an end-of-year assessment roll for 2019, and a beginning of the year assessment roll for 2020. So the end of year assessment roll for 2019 includes all of those cutoffs, all of those assessment cutoffs. It includes us reconciling on behalf of the municipalities how much more money we owe them, because we pay the municipalities monthly their share of the property tax we collect, We pay them monthly based on a beginning of the year roll, but we know that work happens throughout the year. So the end of the year roll provides us with what we need to reconcile. Either we owe them more money or we need to take money back based on the activity that's happened. And then it gives us the base for which to apply the mass appraisal process and the CPI process for the beginning of the year roll for 2020. So at that particular point, we're working with two rolls. We're finishing off 2019, we're beginning 2020. Once we do our year-end process, which includes, as I say, the application of the mass appraisal adjustment factors, and also the application of the CPI limits on the year-over-year increases to assessment to come up with our taxable value assessment so that we can send rolls out to the municipalities and the fire districts, and they can look at their total assessment roll and determine what they need to set as their rate for the upcoming year to meet their obligations. And so they have until the end of March to do that, and the provincial rate is in legislation. It hasn't changed for many, many years, so we also have the information we need at that point in time to do a third quarter forecast and a budget forecast for the next year using the beginning of the year roll 2020. So once we have the rates from the individual municipalities and fire districts, and we know the rates for the province, we can do the tax calculation, and we can produce and mail the property tax bills, which includes both the notice of property assessment and the notice of property tax. Now, this is a normal year. This production and mailing of the tax bills was delayed till June for 2020. The process, however, didn't change, although we were primarily shut down, but we had staff working at all times through the shutdown in order to get us to the point that we could send out property tax bills. Once the bills have been mailed, the assessment process resumes. Our staff is out on the road doing building permit inspections, and installments are due in May, August, and November, and we also send an amended bill just prior to each of the installment dates. Okay, so in this particular year, the installments are not due until the 31st of December 2020. However, the amended bills went out as usual, and so in November, our property owners will receive their final bill for 2020, and the payments will be due December 31st of 2020. And the process will begin all over again. Under regulations, the property tax bill will be mailed on or before the 5th business day in May. And under legislation, they'll be paid in equal installments. However, the regulations were amended for 2020. Payments can be made in check, cash, or debit. Banks, credit unions, access PEI, online banking through your banking institution, or a drop-off check at our offices on Rochford Street. I'm often asked the question about credit cards. It's not a trend across the country for payment of your taxes using a credit card. It would cost the province about $4 million in service fees to allow that to happen. I did note recently that Maritime Electric will allow you to pay your utilities using a credit card if you agree to pay the service charges. But if you look at property taxes across the country, you will see that allowing people to pay using credit card is not a trend. So the tax bill itself, I just wanted to run over it briefly for you. Page 1 of the tax bills, and I'm sure you're all familiar with this, and look forward to receiving it each May. The first page is a summary of the bottom line, and I do at times feel that some people don't go beyond the first page, but it is important that you go beyond the first page when receiving your property tax bill. So past due amounts are at the top. Anything from previous years is captured in that amount. Under the current amount, property tax due from prior years. Now, the difference between the first section and the first line of the second section is that when we send that final amended bill in November, we do not start to charge interest on arrears balances for that final amended bill until the 30th of May of the next year. So there could be some if we were talking 2020 and 2019, what would be in the first half of that would be anything before November of 2019 that hadn't been paid. And on the first line of the second section would be anything in that final amended bill that hadn't been paid, and that would be it. The provincial property tax, the total bottom line that is due, the municipal property tax, the total bottom line that's due, and the island waste management fees that are due, less any credits and payments that had been made during the period for a total current due. And the payment schedule is simply the total current due divided by 3 if there is no past due amounts. Now, I'm going to talk about page 3 of the tax bill before page 2 because I do find it easier to talk about assessment before tax. In this particular notice of property assessment, you'll see that there are two assessments, a market value assessment and a taxable value assessment. The market value assessment is the value maintained by the professional assessors on staff. Okay, that value is the value that can be appealed or referred to us. That's the value you look at to say, does that value reflect the value of my property? And you'll see in this particular example, we have the assessed value for the previous calendar year, and in this case it's 2016. And you'll see the adjustments. So this is this year-end process that I'm talking to you about. In this particular case, there was a mass appraisal analysis whereby the land in the work unit of this particular property was increased by 5%. So every property in that work unit would be increased, the land would be increased by 5%. And there was a 1.3% reduction in the building assessment. So it was $1,800 to increase the land value by 5%, and negative $1,500 by reducing the building value assessment. So it's a net $300. So that's the adjustment that happened as a result of the mass appraisal process. Under the taxable value assessment, this is strictly 100% a tax program. Okay, so the tax program limits increases, year-over-year increases to your assessment to CPI for the previous year. Okay, so in this particular case, CPI for the previous year was $1,200, I believe. It was 1.2%, and I can't see that. You'll have to help me. My eyes are not. Yeah, $1,200. So when we applied 1.2%, which was CPI for the previous year, to the starting point assessment, the assessment for the previous year, it increased it by $1,200 to come up with a taxable value assessment. That's the value that the tax rates are applied to. Okay, so that our property owners are not faced with a spike. It's somewhat of a spike protection, and they know, our property owners know that year over year, their taxes will not increase more than CPI to a maximum of 5%. So if CPI happens to increase more than 5%, it's capped at 5%. It does allow our property owners to plan for property tax payments a little easier than some prior to the spike protection being put in, whereby a particular work unit may, in fact, you can think about some of the work units in Stratford, for example, who may have increased in major amounts over the last number of years. A couple of important notes between market value assessment and taxable value assessment. Taxable value assessment can never exceed market value assessment. So if CPI happens to bump the taxable value assessment over the market value assessment, the two will be equal at all times. We maintain both values in our system, and whenever an assessor talks to a property owner about their assessment, they'll always talk about the market value assessment. Whenever a tax administrator is talking, they'll talk about the taxable value assessment. So on page 2 of the property tax, that assessment is carried over, the taxable value assessment is carried over, and the taxes are calculated. So if you look at the provincial property tax, the tax is a rate of $1.50 for every $100 of assessment. That's strictly a math calculation. And then there are a number of credits applied, potentially. The Provincial Tax Credit, and I'm going to talk about these programs in a little bit more detail. The Owner-Occupied Residential Credit. The Owner-Occupied Residential Credit is no longer a credit program in the province. When the taxable value assessment program versus the market value assessment program was put in place after a freeze of property assessments back in 2008, that program was ended. However, if there was any property owner that had a credit, it was carried forward as a vested credit for that particular property owner. It is eliminated, is removed upon conveyance of a property. Okay, it's vested to the property owner, not to the property. It's also important to note that upon conveyance of a property, the taxable value, the market value assessment and the taxable value assessment are reset. So the taxable value assessment becomes the market value assessment. The program is for the property owner, and a new property owner comes into the program at that particular point in time and then becomes protected by the CPI cap. Okay, I think that's, and the page 4 of the property tax bill is that referral form that I mentioned, that if you want to refer, if you don't agree with your property assessment, then you can refer the property by filling out this form and sending it to us within 90 days of receipt of your, of the mailing date of your property tax bill. And you can also use this form for address changes or by the way, I removed a building, you know, those aren't appeals per se, those are just information items, notices we call them. So I guess I will, did I have, yes I did, okay. Exemptions. There are a number of property tax exemptions. They're in Section 3 of the Act. Churches, places of worship, churchyards, church hall with no net revenue in excess of $500 a year. Property used as a cemetery, important to note there must be at least one person buried, so churches cannot purchase land projecting cemetery requirements. Parks designated by municipalities or the province. Real property held under lease that's owned by the province. So if the province leases property to someone, then the property taxes would be exempt from the province as a property owner, but not the leaseholder. Docks, wharves, etc., runways, buildings or structures that are part of a purification system, the UPEI Holland College and any K-12 private school. And another important note here that often causes some problems for us as administrators is property owned by an educational institution that's not being used for the educational purposes. So it's not an investment opportunity for educational institutions to purchase property and not specifically use it. Federal government property is all exempt. However, there is a Payment in Lieu of Taxes Act whereby the federal government will take our market value assessments and pay tax on those at the rates prescribed by the province. It's just done as a separate administrative function. natural protection areas, wildlife conservation areas, hospitals. So there's a very specific list of exemptions. We talked about taxable value assessment. I think that I covered that. The Provincial Tax Credit program is 50 cents, so it's a third of the provincial tax rate of $1.50. And the criteria is a property owner, or 50% of the property owners must reside in Prince Edward Island for 183 consecutive days. So it's the property that is designated as non-resident. So for example, if I owned a home in Prince Edward Island and I had two siblings who owned it with me and they lived in New Brunswick, the property would be designated as a non-resident property, and I, being the person living in the property in Prince Edward Island, would be paying the $1.50 rate. Okay, so it's the property that's designated. The Seniors Property Tax Deferral Program, it's deferred tax, interest-free until the owner dies or the property owner sells the property. The criteria for this program is 65 years of age or older, has occupied it as a principal residence for at least 6 months, and has a household income of less than $35,000. The Farm Assessment Program for bona fide farmers it represents a significant reduction in the assessment per acre of land for bona fide farmers. A bona fide farmer must be actively engaged in farming, earning at least $10,000 or have 25% of their gross annual income from farming. Same with partnerships. An individual who owns a farm and is registered in the Future Farmer Program is also automatically a bona fide farmer. Widow or widower of a bona fide farmer, or an individual who in the previous assessment year was a bona fide farmer but is unable to operate the farm due to illness or disability. So comparatively, for example, an assessment for cleared land for a bona fide farmer ranges from about $30 to $150, and you can apply the tax rates on that. The clear, for non-bona fide farmer, clear land would range in the $300 to the $3,000 range, depending on the quality of the land. And wooded land ranges from $35 to $75 per acre. Just back for your own information on numbers, the Provincial Tax Credit program represents about 90,000 properties in the program, about $50 million in tax reduction. So the Provincial Tax Credit program, where there's a 50-cent credit on the provincial tax rate for residents of Prince Edward Island, it would represent about 90,000 properties and about $50 million in tax. The Seniors Tax Deferral Program is about 360 properties, about $3 million in tax. Not a program, surprisingly, that there is a lot of uptake on. I do find, as Provincial Tax Commissioner, our seniors do not like to leave debt. The Farm Assessment Program for bona fide farmers, about 10,000 properties, about $7 million in tax reduction. The next program is the Farm Use Program. So you may own property and not be a farmer, but you may be leasing the property to a bona fide farmer. If you are doing that, you can qualify under the Farm Use Program. The assessment reductions are not quite as high as those for a bona fide farmer, but it is still a substantial advantage. The property owner leases and rents at least 10 acres of clear arable land to a bona fide farmer for a minimum of 3 years. We have about 2,000 properties, and that represents about $1.5 million in tax savings for those particular property owners. There's a farm building assessment program. Depending on the condition of the building, there may be an assessment allowance applied if the property owner has farm buildings on the property that are no longer used for the reason which they were originally constructed. And we have a grant in lieu program, and the grant in lieu is equal to the provincial portion of the property tax on non-commercial property. This is a program by application where property owners have to be nonprofit organizations providing specified services in the community with a financial need established by financial statements. And this particular program specifically excludes service clubs, curling rinks, golf clubs, health centers, or organizations that receive other government financial assistance for property tax specifically. The Grant in Lieu program right now has about 450 properties and represents about $2 million in provincial property tax. The property tax collection cycle, I've just provided it for you here. In January, before we end the year and start a new year, a notice of overdue property charges is sent to all property owners who are in arrears. And in arrears means over $1.50. So anyone who has a balance over $1.50 receives a notice. In February, we send out notices of liability to tax sale, and this is the first notice that you've ignored all of our overdue notices, and right now you are at risk. If you've been in arrears for more than 15 months, you will get one of these notices. The next notice is a notice of tax sale, which we send again in February, but the arrears is 27 months. And at this particular point, we do not send any further tax sale notices. So we call these a T1 notice and a T2 notice, and each property owner, we are obligated to send each property owner one of these notices at each of those intervals. And at that particular point in time, we can sell the property. However, we do send another whole set of overdue notices in September of each year to everybody again with arrears over $1.50. And we do, it's not legislated, but we do it as a convenience and as a collections tool primarily. We do, and you've probably seen them, we do publicize in the newspaper, it's about a half page, a liability to tax sale. It's a warning that these properties may be sent to our law firm for tax sale if we do not hear from you right away. Every time we do put a warning in the newspaper, we do collect about $4 million in property tax. So it's well worth the investment of putting the notice in the property. And sometimes, you know, they come as a big surprise to the people that see the notice in the tax pay in the newspaper. They may not have received their tax bill because remember I talked about the fact we send the tax bill to the address you give us on file. It may come back to us non-deliverable, but under the legislation, we don't chase you. You are responsible for knowing your obligations. It may be as a result of a marriage breakdown and one partner thinks the other partner is taking care of the situation and it's not. And oftentimes we have property owners who think the bank is covering their payments and this comes as a surprise to them. So it's very, you know, to me as the Provincial Tax Commissioner, this is the most important part of our collections right here because it does clear up a lot of things. We also work very, very hard with our property owners on payment plans. Tax sale is the absolute last resort. We in most cases like to keep payment plans to 3 years, maximum 5 years. However, in extenuating circumstances, we will allow more time if the tax commissioner feels it's merited. 95% of all the properties that go in to tax sale are vacant land, and vacant land where the property owner has died and the estate has never been resolved. Property owners from out of country, property owners who may have been left this piece of property in someone's will and really had no interest in the property, they let it go to tax sale. very, I would say, less than 1% in my almost 10 years as tax commissioner are actually properties that have an improvement, a residential family home with people living in the property. We work very, very hard with our property owners to make it work for all of us. It's important to remember that we have a lien on the property. We have a lien on the property for the outstanding arrears on property tax. So it'll either go to tax sale. If there's a mortgage on the property at tax sale, the financial institution will often pay the mortgage and have a mortgage closure on the property because they don't want to lose their interest in the property. But regardless, that property cannot change hands. That property, nothing can be conveyed or subdivided or changed in that property without the property taxes being resolved. So the province has a lien on every property for the property tax amounts. So if we get to the stage where it's been in the newspaper and we don't hear from anybody and we still must proceed to the tax sale stage, the file is handed over to a law firm representation, and we don't take it from there. The law firm takes it from there. They also do registered notices of tax sale. The tax sale is publicized in the Gazette for 2 consecutive weeks and in the newspaper for 2 consecutive weeks. And if there is a physical structure of any kind on the property, even if it's a barn of some kind that's falling down, we do have a tax sale notice posted on the property. The property will go to tax sale for a reserve bid, which equals the amount of the tax plus the amount it costs us to administer the tax sale. And all tax sales must go to public auction. So I do often get calls that say, I see this property is in the paper for tax sale, can I just negotiate to buy it? Or it would be good as a parking lot for my restaurant, can I just come in and pay the taxes? You can come in and pay anybody's taxes, but it doesn't give you any access to any ownership to the land. So in order to be fair to all tax sales must go to public auction. So one of 2 things happens at public auction. The property sells, and the Minister of Finance provides a deed to the new property owner free of all claims and encumbrances. So if the property owner owed utilities from a municipality and the municipality hadn't stepped up and registered that they have a claim, then those are written off. There is no encumbrances, and also if there's nothing collected other than the reserve bid, there's no extra money. The money goes to the law firm and to the province to pay the property taxes. If the property doesn't sell at tax sale, and TIE would maintain that it's not really the properties that everybody wants to have that don't sell at tax sale. In the end, these particular properties are deeded from the Minister of Finance to the Minister of Transportation and Infrastructure Renewal, and there's an internal transfer of funds for the reserve bid amount. And as the keeper of Crown land, it's up to TIE at that point as to how to and what to do with that Crown land. So that, I know, is a lot, and it's a 30,000 feet look at a very complex system. So I'm certainly open to questions.
Okay. So I know we're past the 11:30. I hope it's all the committee members fine going on to questions, and we'll. Okay. So Gord.
Thanks for that presentation. Just a few things. With property tax, I know especially in my area, the price of homes have gone up unbelievable, and I think it's hurting a certain percentage of people trying to get out of a certain area and into a property, like very dramatically in our province over the last little while. So it makes it hard for young adults and young families, and then they get into the home and poof, there's a lot of expenses. How much would it cost the province to exempt the first-time home buyers from paying property tax for the first year?
I wouldn't have that number off the top of my head. The province does exempt them from real property transfer tax, first-time home buyers. There is that program. One of the major premises of property tax is uniformity and fairness across all property owners. And when you start to put tax programs like that into the property tax system, you're really playing with the uniformity. It's supposed to be your assessment times your tax with your payments. And programs like that, as tax commissioner, I always recommend that they be run potentially out of a department that runs a program versus a tax credit, because you really don't want neighbors to look at neighbors and wonder why there's such a significant difference in tax bills.
Cord?
Can you talk a little bit about the market value versus the sales comparison, and has that number changed a lot in the last year or so, or 2 years?
Well, certainly, when we do our year-end review of assessment multipliers, we've seen the sales numbers increase substantially as well, and so we apply it because our job is to ensure that the market value assessment in the tax base reflects the market value assessment. But there is a tax program to try to protect the property owners themselves. There is a bit of a sticker shock for the conveyance of property to new owners because they lose that cap protection. They might lose a vested credit on that old tax system, and it's a pretty big hit for them. But we do have to keep coming back to the question of, does the value reflect what you paid or what you could sell your property for in the province? And that's our mantra. That's what we have to stick to. That's our job. And the municipalities and the province depend on us to ensure that the money that's brought in can reflect the services that are being provided. So we are seeing them. The increases for individual work units would range from, a low of 0%. You might have Borden Carleton, for example. I know we went through a number of sales reviews that there hadn't been any new construction in Borden Carleton for 3 to 5 years, during a particular period of time. We would look at that work unit or the work units in Borden Carleton and say, okay, we really, there's no justification for any increase in those particular areas. However, if we look to the sales to assessment ratio and we see that our ratio of our market value is about 65% of what the sales ratio is, we say we've got to bump that up. And we try very hard to stay in the, this is not a hard and fast rule. They tend to go from 0 to a maximum of 7% from what we've seen over the last number of years. We try to stay in the range of, an 85 to 100% of sales to market ratio, assessment to sales ratio. So if we see assessment to sales ratios for that work unit in the range of, 60 to, 80%, we know we have to do something with that particular work unit. So it's a numbers, analysis for us.
Cord?
I could talk about that part for a while, 'cause I'm just kind of worried about it.
But I would also come back to, remember, we're doing a mass appraisal. So the opportunity for the individual property owner is that referral process. And you see from our numbers, we're not getting a lot of referrals. So, 300 and some referrals with 110,000 property tax bills going out. So, but that is the opportunity for the individual property owner to say, I really want to understand my assessment.
Cord?
Just 2 more hopefully questions. I know Michelle had touched on it before, but how many deferrals have been requested due to COVID-19?
Well, everybody has a deferral. So nobody comes to us requesting a deferral. Again, this is uniformity across the board. So all property tax payments, due dates have been deferred to December 31st, 2020 regardless of the value of your property or where your property is. So nobody's coming to us asking for a deferral.
I'm good.
Can I just add, because I don't think that really answered Gord's question, did it? How many people are still outstanding for?
Oh,
for
okay,
income
okay,
tax-
I
for
apologize if
property
that's the
tax?
question. So we're getting payments. I mean, there's no question. I would say, you know, we're probably 30% plus people are paying. Again, seniors love to come and see us and pay their property taxes. They really do. And the other thing that we have as an advantage is people who have their taxes through their mortgage, they're still coming to us. So I mean, we're getting payments, and but you know, I guess anyone who has, you know, financial savvy, who says it's not due till December 31st, and you can just set that up in your computer to say to pay that on December 28th. I mean, we shouldn't be surprised if they're doing it. Yeah.
So 70% outstanding in property taxes?
I would say
is
about
that a fair number?
70%. I would say we're about 30% of the revenue that we would have been
Okay,
at this particular point.
okay.
Yeah.
Thanks for clarifying
Yeah,
that.
sorry.
No, that's
Sorry
okay.
about that.
Rob?
Just I have 3 or 4 questions here, but one was interesting on the Affidavit of Purchaser. You've identified that that's a form that's filled out and it identifies the purchaser and their residency. I guess I'm thinking about the Land Protection Act as far as, can it also identify the shareholders of that corporation that are purchasing that land?
Well, I guess that would be another initiative. It doesn't now, and it's the form itself is in the Registry Act as a requirement of conveyance of property. So that would be another whole exercise to a project to
Rob?
So it would identify then the corporation and the address of the corporation, not the shareholder.
Again, I would caution that it's only as good as at a point in time. So that corporation information could change the day after that affidavit of purchaser is so you'd need legislation around and an infrastructure and an administration around that whole process. What are you going to do with it, you know, at that particular point in time, and how are you going to keep it up to date? Could it be collected? The collection's the easy part at that one particular point in time. Yeah.
Rob?
But I suppose that would be anything in life. Any property can change at any time, or corporation structures can change at any time. So I know, I just sort of wonder.
Just the shareholders don't have to, there's no registration of shareholders, requirement of registration of changes of shareholders. Remember, it's the property. So you could change a company could sell property to another company, right? Yeah. So.
Rob?
Anyway, I think that might be some bit of a solution around that, if there was some ways to identify that at that time. Second question I had, well, it really comes more to the municipality side of it, but so we collect the monies, half of the tax rates of a municipality for their residents, commercial properties, whatever. Is there any limit to the amount of rates or the amount of designations that a municipality can do when it charges property tax to its own? They just tell you it's 4 rates, this is the rates we're going with, or 5 rates?
As long as we can do it.
Okay.
I mean, if it's, we want all the blue houses on this street, yeah.
Rob?
Okay, no, and I really appreciate that, because I was of that same opinion. I guess I was just looking for a bit of a confirmation. My other 2 questions are a little bit more things I've asked before in the legislature regarding, and one it regards around the tax sale, on why we seem to leave it so long to implement the process of a tax sale. And I'm dealing with an issue in my own situation right now where it was 1932, so a property, and now it goes up for tax sale. So why, maybe you could give a bit more criteria. It seems to me it was a certain number that you had a threshold before a property went to tax sale, plus there was also a certain length of time. But I know on that property it was 1932, nobody's been paying the taxes and it hasn't gone to tax sale because it was a small little parcel of property and it took that long to get the taxes up to a number that triggered the tax sale.
There is no hard and fast rule. You know, obviously, there's a lot of factors that go into it. Risk-based wise, the level of arrears is one, for sure. The availability of the firm, the legal firm that is doing the work for us, and the priority in their world to do that. The fact that we try really, really hard to not go to tax sale, for sure, and we try not to shock the property owners in the province with, hundreds of tax sales at a particular time. I mean, it tends to get the phones ringing and everybody panicking. So again, that's the 50% social work and 50% tax administrator. You just have to know when and how to deal with these particular items. But it is the last resort, and there are definitely some restrictions around how fast and how many and when and that kind of thing. And we work within, we do the best we can.
Rob?
I guess my only suggestion is that what tends to happen, it gets up to such a high number, then nobody wants to even buy the property. It's not worth it at that time. I think if you could get that property circulating, maybe after 10 years or something, especially when it comes to estates or properties that seem to be really no owner to them, or there's been confusion around that over a period of time, and then get that into the place. Like say in my case, it was 1932, and way beyond my time, and that number gets up to such a high number, then, in my case, are you left with the land on it, do I try to buy it this way, or did I go through quiet entitles, or what's the best process, right? So I think that's one, I would certainly urge you to kind of reassess that as far as to try to get some of these properties back into production, back into who's actually owning them, and people paying taxes on them, I think is ultimately what it boils down to. And my final is more of a pet peeve than anything, and it comes to now, I'm a former farmer, I have about 8 different properties, and when my tax bill comes in, I get 8 different envelopes.
You could call us and ask us.
Why that? Is there any way you can kind of consolidate and save you some stamp money and not?
And you can certainly call and ask us to put a group code in for your particular properties, and we will do that.
Okay. All right. Thanks, Rob. Thank you. Carla?
You had mentioned that you're receiving, I think you said roughly 30+% of islanders who are paying who have paid, or
Yeah, about 30% of the revenue that we would have at a normal year. Yeah.
okay. Did banks have the opportunity to defer property payments on behalf of mortgage owners?
They do. Yeah, and that would be between them and their property owners, yeah.
And so, sorry.
No, you go ahead, sorry.
Were islanders made aware that this was available to them?
That would be between the bank and the islanders. I mean, we don't deal with the banks, but the bank's systems may be only able to do it the way they've done it all the time. We're assuming that, but that really would be between all property owners know that their payments are deferred till December 31st. If the bank is taking a certain amount of money out monthly, then the property owner would need to talk to the bank about doing that. We wouldn't get in the middle of that.
And so if they contacted your office directly and inquired, you would let them know that the bank was offering?
No, we would just refer them back to their bank. Remember, that's a service between the property owner and the mortgage holder. We wouldn't have any clout, or we wouldn't, all we can do is tell them that the legislation has been amended so that the payments are not due in May, August, November. The payments are due in December. So, yeah, we wouldn't get in the middle of that.
Can I ask a follow-up on that? Okay, I'd like to ask a follow-up. Have you identified any banks that have not been submitting any property taxes that would normally have that automatic collection on behalf of residents?
See, we wouldn't, again, we deal with the property owners, and the property owners are responsible for their property taxes. So we would receive any property taxes from any bank who wants to send it to us, and we would apply them against the account. We wouldn't be doing any analysis as to the Bank of Montreal sending it to us, but the Bank of Nova Scotia isn't. Like, it's not relevant to our administration.
Nigel, can I ask you a question on this based on it being a Department of Finance policy that was put in on behalf, like because of COVID, and we're deferring because of COVID? If banks are continuing to collect property taxes from islanders, how that works is it goes into basically a little separate account to carry a balance. So when you get your bank statement for your mortgage, you see that they've that you're accumulating money that is there in trust to go to pay your property taxes. Did you take that into consideration when that banks might hold on to that and essentially collect interest on it because they're holding it kind of in trust, but it's still sitting within a bank account?
I think that,
I don't know, Nigel wouldn't really be involved in it in any way, shape, or form. So, again, the contract between a mortgage holder and a property owner is simply that, a contract. We're not privy to it. We're not involved in it. So, we wouldn't adjust any numbers or any budget process for that. I guess I don't really follow where our obligation would be to do that.
Well,
If
sorry
a
to keep
property
going.
owner,
Are
if
you
a
okay?
property owner is concerned about that, then they would need to talk to their mortgage holder. Remember, the mortgage company has a lien on the home too.
right. However, it is the job, you're collecting the property taxes, and if property taxes aren't being paid, then typically you would charge in arrears and that kind of thing, and you would collect money on behalf of the province. And if that money was being collected on behalf of the province, essentially it would be going into the public purse and being used in that way, and we wouldn't, be carrying, like, even if it's a shortened deficit, like debt on that. But if the banks are holding it in their bank accounts, then it means the banks are actually profiting on the province not requiring property taxes to be collected. Is that possible? That they've done that as a policy?
I wouldn't want to, again, we would be very careful not to, we communicate with the property owners, and we're responsible for the property owners to know what their obligations are. Whatever arrangements they make to pay their property tax bills, that's between them and whoever they make those arrangements with.
Okay, sorry to interrupt you, Carla, sorry, thank you.
So the current policy is if property taxes and charges are in arrears for 15 months or longer, that the property owner receives a notice of liability to tax sale. So how will this work with the deferred property tax?
They're still receiving the notices. And the notice is it's simply that you are in arrears over a certain amount. It doesn't say you're going to tax sale tomorrow. It just says you're at the next step of the collections process. So it should. So we're obligated under legislation to send those notices so people understand the step that they're in. But we have also communicated to all property owners in the province that there will be no tax sales during 2020
Carla?
as a COVID measure.
Okay. Carla?
And so you may have touched on this before, but will people have an option to pay this back in installments, or is it going to be expected to be kind of a lump sum payment?
Be expected, the full amount is due on or before December 31st. And all property owners have been encouraged, who have the means, have been encouraged to make their payments. We also indicate that we'll work with the property owner to let them know what a monthly amount would be if they want to set that up with their financial institution online banking, to have it sent to us on a monthly amount. So the full amount is due on December 31st, 2020.
Carla?
So I'm wondering if there's any consideration being given to how people are going to pay kind of all of these bills back all at once, deferred mortgages, credit card bills. And I'm wondering if the department is working on anything right now to help support islanders, to protect islanders as they're trying to make all of these payments. Because the winter, as we consider all of the payment supports, the financial supports that have been given, how we are going to, what that's going to look like when this winter, when all of that stuff runs out. So I'm wondering if the department is working on anything that might support islanders in that.
Again, from an administrative perspective, I'm working with the relief measures that have been put in place in regulations back in March, I guess, March, April. And at this particular point in time, there hasn't been any new regulations proposed. So right now, the regulations as they stand are that there's an opportunity for property owners to take the time they need in 2020 without any interest, and property tax interest is a very high rate, and it's meant to be a high rate to be a priority debt. The revenue, municipal and provincial revenue is important, and so there's no interest. So people who wouldn't have made their payment in May that was due, or a third due in May, there's no interest being charged on any of those accounts. So we're hoping, and we certainly do, again, this is the part social worker that comes out, we certainly hope that they're taking the time that we've made available to organize, if at all possible, their financials to meet their obligations in the property tax side of things. And we certainly know, as we do in any year, there is going to be people who are in arrears after December 31st. In fact, it's not unusual for 30% of the property owners to be in arrears, and remember, arrears is anything over $1.50, at the beginning of the next year. So at that particular point, we'll do our best to work with the property owners to make it as painless as possible for them to meet their obligations. So our recommendation would be, call us. We have to work within the legislation, but we will do whatever we can to help these people meet their obligation.
Okay, and I think Nigel also had an intervention.
Sorry.
Just, I think not to forget the extraordinary level of financial support to people and to businesses through both orders of government. The federal government have put in some fairly significant programs to help support people financially during this pandemic. The intention of that was for them to satisfy their basic financial obligations, groceries, rent, and you can think of property tax as part of that. It's one of your basic pieces, and to try and design programs that would be, in some sense, adequate to do that during the pandemic. So, I think to the question, like what has been done for people to be able to satisfy these bills, was to provide some money when they needed it. Now the province and the federal government, we've got programs that deferred payment to allow people time. But encouraging people to satisfy their financial obligations, when they can. It's just because you can defer doesn't always mean you should. And that people should plan for things being due when they are due. And the first part for people who've had to access these programs is that their income was a measure of protection to meet these obligations. So it's not perfect. It's not going to be 100%. I think we understand that, but by and large, protecting people's incomes should have, in the first order, helped them satisfy their financial obligations, including property taxes.
Carla?
I appreciate that, and as we consider the financial support, it was significant during that time to support people during the pandemic. Unfortunately, the economy has changed, and people may not be back to work, and so just to be conscious that we've created potentially a situation where people are having to choose between paying their property taxes and feeding their children or feeding themselves, and that may be okay for many families, but that we may still have families in that very real pinch, worse than pinch, dire straits. And so I appreciate them being able to call and work out some sort of flexible schedule, and I appreciate that you're working within the legislation that you've been given. But those are problematic restrictions. And I'll leave it there for now.
you're done? Okay, thank you. Anybody else? No? Okay, I have a sizable list. I hope that's okay. Just a quick, what percentage of properties are within municipalities? There's 110,000 you had said, but what
I'm thinking the number off the top of my head, like there's like only a couple of thousand properties that are outside, that don't pay any municipal, tax, but I'd have to, it's not something that we necessarily capture. Maybe municipal affairs would be more, would have more information on that than we would, but I can see what we have. I don't
Okay.
guarantee what we have, but I can see what we have and send it to you.
Okay.
Okay.
And just a curiosity around, like, in other jurisdictions, is it policy of most provincial governments to collect on behalf of municipalities and then distribute? How does that work?
In all provinces, with the exception of New Brunswick and Prince Edward Island and the territory of the Yukon, I believe, the majority, if not all, of property taxes are collected at the municipal level. And there is no provincial property tax. It's almost done opposite of what we do here, in that the province requires the municipality to collect a percentage of an education tax or what have you, and the municipalities flow that money through to the province.
Okay.
So it's very hard to do an apples-to-apples comparison of property tax systems across the country.
Right. So municipalities are required to do several different functions that an unincorporated municipality would do. Is there any percentage of the $1.50 that goes back to the municipalities in order to help them, I guess, pay for providing those services?
Yeah, there is an
addition.
agreement between the municipalities and the provinces based on services provided by the municipalities. And it's a funding agreement, and it's administered by municipal affairs.
Okay. And do you know when is that negotiated municipality by municipality, or is that something across the board?
I believe it's across the board, yes.
Okay. And is there, I just lost my questions because my computer shut down. Is there any consideration given to fast-growing communities around the province when it comes to the portion that's provided to them in order to be able to quickly ramp up for that growth?
And again, that would be a funding formula question that would have to go to municipal affairs.
Okay, thank you. What I find interesting, we often talk about our main industries as being tourism, farming, and fisheries. But real estate is one of our major industries, and there's a lot of real estate business that's done here in PEI. So for the market value versus the rate assessment, so the mass appraisal system, can you walk me through a little bit of that? And do you review that by county, or do you look at any specific areas that might be, that the land property might be increasing exponentially fast over others? Do you do any analysis on that?
It's done by work unit, and work unit is really subdividing the province into about 400 plus work units, and our assessors are assigned so many work units, and they're very familiar with their work units, and so they have their fingers on the pulse from doing building permit inspections in those areas, and then on top of that, we have the sales analysis information that comes to us and is analyzed and applied. We use SPSS to do our statistical analysis to see what the sales activity is in the particular area. And so we look at all the sales values. They have to be qualified sales, of course, not a fire sale or a dollar sale to a family member, but a qualified sale. And we would look at all the sales in that particular work unit, and we would do a weighted average of those sales to take a high-level look at the value of property in that area, and then we would do the same weighted average with the assessments that we have assigned to those properties in that work unit, and we would do an assessment to sales ratio. And we would say, okay, is the assessment to sales ratio low? Is the assessment to sales ratio reasonable, or is it high? And based on the answer to those questions, we would apply percentage increases to every property in that work unit. Now, there will be outliers. That is the premise of mass appraisal. There will be outliers that should be higher or should be lower. We really wouldn't necessarily receive many referrals from property owners to say we want our assessment higher, but we would receive them to say we don't think that mass appraisal value fits our particular property, and we would look at it from there. On top of that, with commercial property, the process is a little different in that every commercial property is assessed individually in the province, and we use a Marshall Swift tool that helps us do that, and it's based on construction costs, and also sales factors. So it is a little different on the commercial property. So if you have an area that's really blowing up with commercial type of activity, then we would capture that in the process of bringing them onto the roll, bringing the improvements onto the roll.
Okay. And from a residential standpoint, so if you have, let's say you have an area that has, maybe it's an artificially inflated sale price where, people are, where it's a sought after area and paying more than market value for those houses. How does that impact residents that have lived there for a long time? I understand that there's the cap and that they can only be increased by the cap. But if you have enough properties in one area that are sold above market value, that seems to me like it can negatively impact people that have been living there for a significant amount of time. Do you look at artificially inflated property assessments as well?
So we would, so we have to be careful with the term market value, because if you're having a lot of sales and they're selling at these values, then, and they're qualified sales. I mean, they may be, in our minds, who've lived there in our neighborhood for a long time, we may be considering them inflated, but they are the sales. That does reflect the market value of that property. If it was to sell again tomorrow, it would sell for that price or less. So the way that price or more. So with the mass appraisal system, we depend on the referral system to identify the properties from the property owners to come to us and say, I've lived here for 25 years, and we think 7% for the last 3 years on my property is outrageous because I bought my property at this particular value back 20, 30 years ago. Then the conversation would have to happen with respect to what is the market value of your particular property in this environment where the values are increasing significantly, and then we would get down into the nuts and bolts of the roof and windows, and if it's a 30-year-old property and it's been depreciated over these number of years. Remember, depreciation goes into the formula as well. Where is that particular property? If you put that particular property on the market tomorrow, will it have the advantage of the others? To some extent, it will. For sure, it will reflect the market value. So, I think those are individual conversations with property owners. They're not done on a mass basis, but they will be brought up.
Yeah.
For sure in the Brighton area. We ran into that for many years. We had bungalows that were sitting there with $500,000 homes, and it's just something you have to deal with through the whole system.
Okay. I do have a couple more questions on that, but first of all, I just want to ask, you said that there's 110,000 properties on PEI. The Task Force on Land Use Policy reported, I think it was in 2014, that there was 30,000 undeveloped lots or undeveloped properties in PEI. Would that 110,000 include the undeveloped lots?
Every property is assessed, so vacant land is a big part of the assessment base. Every piece of property is owned by somebody and is assessed. An undeveloped property can be developed over time, and we would receive building permits, or you might have a farm property that's been subdivided into a subdivision, and there's a plan that's registered in or filed in the registry office, and at that particular point we would subdivide the property, but we don't have new owners for that property. So yes, absolutely, there are approximately 110,000 PIDs in the province.
Do you know if that 30,000 has increased or where that stands right now?
I wouldn't have that information.
Okay. And from what you had said about the I forget what it's called, but it's the 50-cent credit to islanders
Provincial
that
Tax
have lived
Credit.
over 163 days, is it? Or
183 days.
183 days. So basically, I think you said that there was 20,000 properties owned by non-residents that do not receive that tax reduction, meaning about 20,000 residents are
Approximately.
20,000 properties are owned by non-residents. Can you tell me how that has changed over the last 5-10 years? Is that something you track?
Not specifically, but we haven't necessarily noticed a big change in the number of non-resident. I mean, we always have, the majority of our residential properties are eligible for the Provincial Tax Credit program.
Okay. And is there any flags in place that when a certain area gets increases in like non-residents? So I've heard, and it's anecdotal, but people point to areas such as Point Prim, for instance, which has a lot of waterfront properties, and one of the things that they refer to is a death by 1,000 cuts, right? Of developing our waterfront, our water vistas into cottage developments and that kind of thing. Is there any flags that the province has in place to identify what percentage of, like maybe your 400 areas would be owned by non-residents, and do you watch that?
So I think it's important to note that the mandate of the Property Tax and Assessment Administration is just that, and we collect and we store data specifically for that purpose, and really we're not supposed to collect and use information that we don't need specifically for that particular purpose. However, other areas of government may do that type of analysis, land use planning and that type of analysis, and they may come to us and ask us for information from our database, and if we can provide it, then we would provide it for their analysis. But we don't have a mandate for doing that. Our mandate is to assess property, tax property owners, and bring in $200 million a year.
And it's interesting you say that, because I feel like you would be an integral department to be able to assist with information. So collecting and storage of data is one thing, but if you're collecting and storing data but not using it to really do an analysis on what's happening on the ground, I think that that's a really important perspective to have, to allow other departments to be able to formulate policy. So is that information available? Or
Well, I think it's important that, again, we work under the rules that we collect and store information that we need to run the mandate that we're running. And so that's what we do. And so we don't go out and ask each of the departments what land information that they would be interested in having and collecting that at the same time. Because remember, under freedom of information, we shouldn't be collecting what we don't need to run our administrations. So if we are, and we are an integral part of a lot of departmental planning, and we're probably the first department or the first division of the department that is called when there is policy type of work being done. And if we can provide it, under, again, the Freedom of Information rules, if we can provide it, we absolutely do provide it.
Okay, thank you. Nigel, you want to say?
If I understand the question correctly, if you're looking for information on the number or the concentration of non-resident ownership, I believe that information is gathered and collected in perhaps a responsibility of IRAC, Island Regulatories and Appeals Commission. I think they monitor that, or they have the mandate to do that, but it's just not something within the Department of Finance, specifically in the taxation and property records, to do that work. But I think it's somewhere else in government, and I believe it's IRAC.
Okay. So,
Is that right, Beth? Is that?
Okay, so I'm interested in audits, and so I don't think the Auditor General has audited this area for the last 10-ish years, maybe even more. Can you tell me, has there ever been an Auditor General performance audit completed? And if there hasn't been, have you done internal audits?
I do recall, and I'm not sure exactly what type of audit you're referring to. What would they be auditing?
Oh, compliancy and, like the performance audits that the Auditor General would do. Have you been audited?
Yeah, okay, well, I guess I do recall early in my years as Provincial Tax Commissioner responding to annual progress reports. So I think probably for my first 3 years as Provincial Tax Commissioner, which would have started in 2009, I guess, I do recall having to provide updates for an annual auditor's report, at least for 3 years. I can't, again, it's a while back. So there must have been a performance audit done just prior to me arriving. But since I've been here, I haven't had any performance audits completed.
Okay, and when did you start with the
December of 2008.
2008?
December,
Okay.
yeah.
So over 12 years. Do you do internal audits on compliancy and even rate structures and that kind of thing?
So could you just repeat that again?
Yeah, so internal. So on compliancy, rate structures, jurisdictional scans, do you do any internal audits on how the department operates?
I guess I'd have to say no, because I don't really understand what we would be, if it's quality control, I would have to say, yes, we do quality control all the time with respect to ensuring every property tax owner is mailed a property tax bill under the rules of the legislation, that overdue notices are mailed to the overdue accounts as defined by the Act. So if you're talking about quality control, then I would say we do that every day, but I'm not sure exactly what components of the system would be audited per se. Did we apply the right rate provided to us from the City of Charlottetown to the bills? Well, the City of Charlottetown would be watching that with very close eyes. So I'm not exactly sure what would be audited.
Okay, and then I don't know if anybody else has any questions, but you mentioned if a property goes unsold that it goes into TIE. it's deeded over to TIE. Do you have any ideas to how many properties annually that might entail?
I don't off the top of my head. Again, I can provide you the number of properties that went to TIE. Obviously, 2020 is not going to be a good example, but we can certainly provide a couple of years back.
Okay, thanks. And then I guess probably my last question would be, where does the $1.50 compare to other jurisdictions? Would we be in line with what other jurisdictions charge?
Again,
property
you'll
taxes?
never get an apples-to-apples comparison on property tax rates. The majority, again, I believe that there's only the three of us that actually have a provincial property tax. So it would be a very, very difficult comparison. You're going to have to look at each individual municipality across the country.
Okay, because the provinces don't always collect the tax. Okay, and actually, one other thing. So I think the number you said was 163 appeals for 110,000 properties, and that doesn't seem like very many at all. I would agree with you. So, have you looked at so when you have a low number of referrals, that would either mean people are quite happy with what they're paying right now, or they don't want to rock the boat, possibly.
They could end up with higher assessment, yes.
Yes. And so many municipalities only require building permits if it's structural changes, not if it's cosmetic changes. However, I could put in, maybe I'm in a municipality where I put in a $30,000 deck, and that might significantly change my property assessment. Is there anything, if there's no building permits, is there anything to trigger a reassessment without a building permit?
We depend on building permits, absolutely. And the only other, well, there are a couple other factors that are used. We do have tools with respect to aerial photography. We would use it if there was a particular question about a particular property. We would use it. We use it as a tool, and also the sales will trigger. May trigger an inspection of a property if a property is 35% selling higher or lower than what we have on the roll. It could trigger an inspection. But I guess I take it back to the self-responsibility of understanding your assessment and understanding your tax, and we depend on the property owners to take a look at their individual assessments and try to understand, and if they don't, to call us and have a conversation with us. I'm not saying there isn't more than 163 phone calls to our office that might have ended up in a referral if we hadn't had a conversation. Certainly, the month or two after the mailing of assessment notices, we're very busy on the phone, and if we can resolve the issue on the phone, we definitely resolve it on the phone rather than putting everybody through the formal referral process.
Right.
But it's unfortunately coming back after receiving an assessment notice for 2 or 3 years and saying, I've been paying too much and I just didn't know and I didn't understand. It's not an accepted excuse. Every year you have the opportunity to question what we're sending you.
Right.
Yeah.
Okay, and then my final question, I feel like I could ask you, talk about property taxes
Yeah, I know.
all day, and I didn't realize that that's how I would actually feel, but I do. That or income tax. But my final question is, are you involved in IRAC investigations or IRAC, so if they have an application process go through, are you engaged with IRAC's review of those applications and potentially how any properties are linked based on where the notice of assessment goes or
No.
different things? IRAC never engages you?
Well, again, you know, there would be privacy issues that would have to be resolved, or that they have a mandate, we have a mandate, so,
Okay.
yeah.
Makes me feel like what you do really is that canary in the coal mine, right? So in a time when we have a housing crisis and properties are selling for much higher than they would be because you can get that price, the initial signal would seems to come from the valuation of the properties. And anyway, so I think that your department does. You have a very big task, but you also are the keeper of a lot of things that impact islanders in indirect ways, right? And that the signaling would come from, I mean, we all need to have shelter, right? It's the number one need of islanders is to have a place to live. And so I feel like your department holds a lot of information. I think that's why I'm so interested in how it works, as well as how that information that is collected and stored can be used in order to develop policies to better look after islanders. So if nobody else has any questions, I'd like to thank both of you for coming in. I know it was a long session, and I appreciate you coming in with your presentations and the questions that you fielded. I appreciate that, so thank you very much.
Thank you.
So we'll take a very short recess, and then we'll just finish up our agenda. All right, everyone, we'll just resume. Next on our agenda, we have review of correspondence, and we do have a letter, sorry, it's just the one, right, from David Keedwell, and that was our request on the Accessibility Supports Program. And then they provided a detailed action plan. Looks like a number of items to be completed December 2020. So how would the committee like to proceed with this? Do we want to review the action plan and then defer a decision, or wait until after December 2020 to see what the progress is at that point in time before we make that decision? I see 1, 2, 3, 4, 5. There's 5 recommendations, 6 recommendations that are to be completed, I think, with the December 2020 timeline. Some of them are completed. So do we want to, we are meeting in 2 weeks, do we want to make a decision on how we want to proceed with this one? Or do we want to defer that until December? Who would like to?
It makes sense.
Carla? Oh, sorry. Okay, Carla?
I think it makes sense to wait. I mean, we did get kind of this update. I think it makes sense to wait until December when we can get a full update.
Okay. Sid?
Exactly.
The same thing? Everybody in agreement with that? Okay. So we'll do a follow-up on that in December. or January probably. And then there's a few other letters, a couple of other letters that were sent out based on decisions that the committee had made. Any other correspondence received by any members? Okay, so review of scheduling. So we do have a meeting in 2 weeks' time in which we will be hearing from IIDI, and that is our only meeting scheduled, is that correct? That's correct. That's the last meeting that we have scheduled, so I guess we'll move to new business. And does anybody have any new business that they would like to add, or any discussion of other departments or anything that we would like to come to review with us? Okay. All right, so we could, I guess, have a further discussion on that in 2 weeks' time, knowing that we don't have anything on our immediate work plan. Did we have stuff that was waiting on our work plan?
Yes, actually,
Ryan?
those letters that are in that memo that the committee sent, I think in 2 cases, the committee has asked for the appearance of the department about
Okay.
outstanding implementation of recommendations from 2017.
Right.
So I will be attempting to schedule those appearances in October,
Okay, all right.
following the next meeting.
Okay, perfect. And so, and then we'll just flag that if anybody has anything to bring forward at the next meeting, that we know who those witnesses would be and departments would be. Okay, so if there's no other new business, then I'll ask for a motion to adjourn. Corey, thank you.